So how do you tell if you're underbilled or overbilled on a project? Well, you need two different sets of data. One is based on actual activity and the other is based on estimated activity. So actual activity covers what has happened to date, meaning how much you've billed the project owner or general contractor and how much cost you've incurred on the project. That activity has happened. The invoices have been sent out, or you've received those bills and recorded those. Maybe you've received the cash or have paid out the cash. Whatever it is, that activity has occurred. Now, the estimates are obviously what hasn't happened yet. This is what you estimate will be the total revenue and total cost on the project. We are looking into the future and saying this is where we're going to land on the project. We're going to make X amount of dollars. So let's compare these two data sets using two different scenarios. According to actual activity on this project, we have $100,000 in billings, $80,000 in costs, and gross profit of $20,000, or 20%. Now, according to our estimates, we expect total gross revenue of $200,000, total estimated cost of $150,000, total estimated gross profit of $50,000, and estimated gross profit percentage of 25%. Now, when we compare these two gross profit amounts, actual versus estimate, we notice that the actual is less than the estimate, meaning we are underbilled. We did not bill enough to recognize the estimated gross profit. So what we're going to do is increase revenue and increase the underbilled asset account. In accounting terms, you would credit revenue and debit the underbilled asset account. Now let's take a look at the second scenario. Same actual activity. We had $100,000 in billings, $80,000 in costs, $20,000 gross profit, or 20% in gross profit. Now the estimates are different. We have total gross revenue expected of $200,000, total estimated cost of $175,000, with $25,000 estimated gross profit, or 13% estimated gross profit percentage. Now, when we compare the actual versus the estimates in this example, we see that the actual activity is greater than the estimate. 20% is greater than 13%, which means we are overbilled. We're billed ahead of our estimated gross profit. So what you're going to do in this scenario is debit revenue, decrease revenue, and credit overbillings, the liability account, to recognize that estimate. I hope that was helpful. Please leave a comment or question below. Thanks again for tuning in. I'll see you in the next lesson.